Hello and welcome to our market alert video for today, which is January 24, 2025. Thank you for watching. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And this week I want to talk with you about, will Trump's tariffs cause inflation? And there's a lot of data now that we can look at. We've got more information than we had before now that the few days of the new presidency are behind us. And so there's some analysis that we can draw from it and we can make some conclusions. And so I want to dive into that with you. But before I do, let me just tell you, our firm, Retirement Planners of America, we are a firm that specializes in retirement planning, which means that we work with people who are over 50, who are retired or retiring soon. So if that's you, then we'd love to visit with you, and you can learn more about us. We have seminars, we have videos, we have podcasts, we have all kinds of information to help you to have a successful retirement at RPOA.com. So, and thank you for watching. So let's talk about the tariffs. Now, Trump gave a press conference here a couple of days ago, and in the press conference, they were asking him about the tariffs. And they said, are these tariffs to get economic sanctions, economic benefits out of Mexico, Canada, China? And he said, not at all. That's not what that's about. What he said it's about is about the border and fentanyl. So basically, the 25% tariffs on Canada and Mexico are to encourage them, if that's the right word, to secure their border. He said, we don't want any more illegal immigrants coming across the border. We don't want any more fentanyl coming across the border. And these tariffs, these 25% tariffs, are to get them to secure the border. So let's examine that. Mexico, when Trump was president the first time, they secured their border in short order. So those tariffs didn't have to even be enacted when they had already decided, okay, uncle. Now, Canada, it's the same thing there. The problem in Canada is not as big as the problem coming across the border from Mexico, but it is increasing at a very high rate. And so that's the concern. I think the rate of growth is like 300% a year. So it's going to become a huge problem, and Trump wants to nip it in the bud. And so securing the border is not a tall order for Canada or Mexico in our view, and therefore those tariffs probably won't be enacted, or if they are, they'll be short-lived. So the whole, all this fear that people have about these tariffs and the inflationary effect they're going to have, in our view, is not going to happen. It'll be temporary. Now, China's the same thing. They asked him about that, and he said, well, what the reason for the 10% against China is he wants to stop fentanyl from coming into our country. And apparently fentanyl starts in China, comes over here and then it funnels its way through Canada and through Mexico. And so therefore he said, I had a deal with President Xi to stop that. He actually agreed. But apparently the Biden administration did not follow through on it, and so it fell onto the cutting floor, if you will. But if they had an agreement, then what's to say that they shouldn't just go back to where they were and agree to it again and enact it, and therefore the 10% tariff isn't necessary. So those are the three big ones that we're hearing a lot of news about, and in our view, they're easily solvable. And therefore, we don't think they're going to be the big bad thing that a lot of people are wringing their hands about. Now, are tariffs inflationary? Yes, they are. But if we go back and we look at President Trump's first term, we'll see that, yes, we had tariffs. But no, we had very, very low inflation even during that time. So that's another argument for these tariffs would not be inflationary to the point of harming our economy. And then the other thing is that there's an ingredient that is in pretty much all of our products and pretty much everything, and that's oil, right? The cost of oil. So if he follows through on drilling and dropping the price of oil significantly, then what that'll do is it'll bring the price down of food and energy, gasoline, all those kind of things, and that is bringing inflation down, and that'll compensate for any inflationary effect that we see that the tariffs might create. So overall, the fear over inflation, we think, due to tariffs is overblown. Now, Having said that, what does that mean for our investments? Well, it's very good news, because you may have noticed that the bond market and the stock market are tethered to inflation and interest rates. And so if inflation comes down, if the tariffs are not inflationary, if all these fears abate, then the Fed most likely will lower interest rates in the second half of this year. And if they do so, boy howdy, will the market like that. They've liked it in the past, should do it again. And the consumer will like it. If eggs and bacon and groceries are cheaper, they can buy them, and gas is cheaper. So all of those things bode well for the economy and therefore for our investments. So from a stock and a bond side, we're pretty optimistic. Now, we're going to have our Fearless Forecast next week. We still want to let a little bit more of this stuff settle to see what's going on, but we're pretty much there at this point. So as we've done for, I want to say 20 years, we'll have our Fearless Forecast. And for those of you who followed us for those 20 years, you know we've been remarkably accurate. We had a streak of about 5 or 6 years in a row where we pretty much nailed where the market was going to end the year. So I always say you miss these Market Alert videos at your own peril. So now, having said all of that, it is imperative in our view, if you are over 50, if you are retired or you are retiring soon, that you have a strategy not just to buy and hold, but also to sell. We think it is extremely important to protect your retirement. That's why we have a strategy we call Invest and Protect. And when our clients retire, we call them a SCWPR. And SCWPR is the acronym for Second Childhood Without Parental Supervision. Think about it. So when they're SCWPRs, we want them to go and enjoy, have fun, play, don't even worry about this stuff. And a great deal of not having to worry about this is having a strategy to protect on the downside, so that if the market collapses, you don't see your investments and your retirement vanish in front of your eyes. Our strategy did say to sell in November of 2007, before the stock market crash of 2008. And you know how bad that was. The pandemic, the day before the pandemic, our strategy said to sell as well. And we have every confidence that when the next bear market comes, our strategy will help to protect against that too. So if you're over 50, make sure that you have a strategy. And if you don't, check us out. Our website is RPOA.com. So I hope this video finds you healthy, wealthy, and wise. I hope that we can turn you into a SCWPR. You can only do that if you're a client of ours. And so we'll talk soon.
Retirement Planners of America.